Yes, people, a very happy to all of you. So, guys, we started with a brand new topic yesterday, which was accounting for bonus issue and rights issue. So, in that, the very first concept that we dealt with was bonus issue, and we are halfway through. And today, I'm expecting this to get completed. So, what is a bonus issue? So, bonus issue is basically the shares that has been issued by either the private companies or the public limited company to its existing shareholders absolutely free of cost, which means the shareholders are getting the shares, but in return, they are not paying any money to the company. So bonus issue means an issue of additional shares free of cost to the existing shareholders. I'll do a quick recap of what we discussed yesterday. So this was the first point. Second point, this process of issuing bonus share is called as, three names is given to it. Either it is called as scrip issue, or it is capitalization of profit, or capitalization issue. These are the three names you have to remember. In that, very common name is capitalization of profit. We call it as capitalization of profit because we saw the journalist entry yesterday, where when the capital has been, or when the shares has been given to the shareholders, we credit the capital account. But instead of debiting the bank account, we are debiting the reserves. So this is nothing but we are transferring the amount from reserve account to capital account. So the process of transferring the profit, reserve is nothing but accumulated profits, savings. So that profit, when you transfer to capital account, that process is called as capitalization of profit. Third thing, we saw that upon issue of shares, the number of shares issued by the companies will increase. So let's suppose I am the existing shareholder. I had 100 shares. Now let's suppose the bonus issue is 1:1, which means what they're doing, same 100 shares they're issuing free of cost. So I'm getting 100 shares more. So the total number of shares of the shareholder is increasing. Also, the number of shares issued by the company is also increasing. So number of shares is increasing, so is the capital. We saw that when the amount is transferred from reserve to capital, capital is credited. Upon the capital being credited, the total capital of the company will increase. But the net worth of a company does not change at all. What is net worth? Sir, capital plus reserves and surplus put together is net worth. Capital is the money belonging of the owners. Reserve is also money belonging to the owner. If I add both, it is net worth of the company. But here what happens? You are subtracting 150,000 rupees in the reserve and adding the 50,000 in capital. So within the net worth only plus 50,000 and minus 50,000 is happening. So the net worth is not changing at all. Fourth point, for a company to issue the bonus share, first of all, the authorization has to come from its article of association. Article of association is basically a rule book that the company has to follow. So in that, for each and every complicated procedure, what is to be done, how it is to be done, all the rules and regulations are properly established. So if you are intending to issue bonus share, go and check in the articles of association which you drafted while incorporating the company. In that, whether the permission for issuing bonus share is there or not. If it is not there, what are you supposed to do? Correct. That procedure is called as amendment. So you have to reapply, resubmit the AOA with the revised terms and conditions. You have to file that AOA to the Register of Companies, ROC. Once he gives the approval, then the latest MOA comes into the existence. In that, since the authorization is given, we can go ahead with the issue of bonus shares. Not only that, once AOA authorizes you to issue the bonus shares, you are supposed to call for a general meeting. Either in AGM or extraordinary general meeting, you're supposed to call forward. And in that, you have to take approval from the shareholders and get green signal for issue of bonus shares. So I explained you what is annual general meeting and extraordinary general meeting. Just an outer picture I gave you, not in depth. In depth, you'll understand in the law, the subject law. Whereas I gave you an outline meaning of what is extraordinary general meeting and what is annual general meeting. Annual general meeting is a meeting that is compulsory to be held once in a year after the financial year is over to adopt the results, to discuss the results and you know what, you discuss certain agendas, certain important topics for the upcoming financial year. Sometimes there are some important decision that has to be done you know, by the shareholders, and we cannot wait till AGM. So in that case, what do? We convene a extraordinary general meeting for urgent purpose. So this is extraordinary general meeting where things like bonus issue or any other emergency thing where the permission of the shareholders is required as per Companies Act, that has been discussed upon in the EGM. Then once you get authorization from AOA and the shareholders, and before you go ahead for the issue of bonus shares, you have to check whether you have defaulted any payments or not. There are two types of payments which you should not have defaulted. One is the payment of interest or the principal on the public deposit or the debt securities that is issued by the company. In other words, the company has done any borrowing, taking money as a loan from the public, that is called as public deposit, issuing debenture to public, debenture, bank loan. On that, if there is any interest outstanding and principal outstanding not settled, so without settling that, you cannot issue the bonus shares. So you should not have defaulted or should not have kept any pending payment of the interest and principal. Second, you should not have defaulted the payment of the statutory dues pertaining to employees. There are certain amount that you have to deposit with the government. That is called as statutory dues. Statutory means what? It is compulsory by law. Law says that whatever salary you're paying to the staff, no, don't pay the entire salary. 10% of that you deduct and give the balance 90% to the employee as their salary. And that 10% what you've deducted, you don't keep it. That you deposit in the PF account of the employee, and that money is there with the government. And I gave you the logic behind why government is making this initiative also. It is for the purpose of long-term savings. So like that, there are a lot of statutory dues which is compelled by the government that you have to deposit to the government. By whom? By the company on behalf of the employee. So such payment, if it is not made, then you cannot issue bonus shares. Can a company issue bonus shares in lieu of dividend? That is, the dividend is declared, but instead of paying the money, they say that for the same value, I'll give you extra shares. Is that accepted by Companies Act 2013? The answer is absolutely no. So bonus share shall not be issued in lieu of dividend. If you've declared in the AGM, the shareholders have approved the dividend, it is the responsibility of the company to disburse the payment in money, in cash or bank to the shareholders. You cannot say that instead of money, you please take bonus shares. That is not allowed. This is prohibited by section 63, subsection 3. Very good. Can we issue bonus share to partly paid equity shareholders? The answer is no. Bonus share can be issued only to fully paid equity shareholders. So if it is partly paid, what are you supposed to do? First, make it fully paid. Then you issue the bonus shares. But I told you there is one particular catch in this particular point, which I'll be discussing in today's class. Now, guys, all of you know that the journal entry for issuing bonus share is what? First is different types of reserves, account debit to bonus to shareholder. And the next entry is what? Bonus to shareholder to equity share capital. So if I combine these both entry, what will happen? Bonus to shareholder credit plus and bonus to shareholder debit minus will get knocked off. So what is my ultimate entry? Reserve account debit to equity share capital. So which means we are transferring the funds from the reserve account to the capital account. In that case, which are all the type of the reserves that you can use and in what order we are supposed to use it. So we learned that the first reserve that we will use is CRR, Capital Redemption Reserve. So what is Capital Redemption Reserve? So today, if I'm issuing a preference share capital with the condition that 5 years later, I'll redeem it. So at the end of the 5th year, it will be a pressure on me to repay the money because I have not made the sufficient arrangement. So we saw the example of parent one. Parent one, what they do, they want to buy a car worth 10 lakh rupees or 5 lakh rupees after 5 years, but they do not make any particular savings for that car. So when the 5th year or the 10th year comes, what happens? When there is no money, but they still want to buy the car, what they do? They take loan and buy the car. So that time there's a tremendous pressure on their head. On the other hand, we saw one more company, what they did. So one more parent, what they did. Every year they made a savings. In such a way, at the end of the 5th year, they had their requisite amount. And conveniently from that savings, they purchased a car without taking any loan. Same way company also, if they want to repay the money, preference share capital has to be redeemed. No, it is always advisable that every year from the profit, little by little amount, you keep on saving. And that saving is transferred in the CRR. So at the end of the 5th year or 10th year, whenever you want to redeem the preference share value, from that amount, you can redeem the value. So CRR is basically called as Capital Redemption Reserve. So capital redemption means what? Capital repayment. So capital repayment reserve. So a reserve that is created for repayment of capital. Reserve is nothing but a savings that I'm creating out of my every year's profit. So that you have to utilize first, because this is a restricted reserve. Any money which is transferred to this reserve, I cannot use it for whatever purpose I want. So this CR is for restricted purpose. Therefore, it is always advisable to use the restricted reserve. And who is advising this? The Companies Act itself is advising it. Because if you don't use for this purpose or other purpose, then for which purpose will you use it? There are 1 or 2, 3 purposes only for which you can use CRR. So in that one purpose is issue of fully paid bonus shares. Next, capital reserve. This was not included in the yesterday's session, but today when I happened to go through the other questions, so there is one particular question where they had given a capital reserve question. So in the question they had given a capital reserve, which we'll be doing today. So in that they have given an explanation that in the question, if there is a capital reserve also, you also need to take into consideration before the security premium. So all of you know capital reserve. We learned in the share capital topic. So whatever amount is forfeited and reissued, the extra amount which is there in the forfeiture account, that we transfer to the capital reserve. So capital reserve is nothing but, what is capital reserve? We discussed that also. What is capital reserve? Capital reserve is created out of capital profits. How do you generate capital profits? Any profit that is generated at the balance sheet level by balance sheet transaction, that profit is transferred to capital reserve. This also was discussed. We discussed what is reserve capital, what is capital reserve, both was discussed with all of you. 12th CBSE book, TS Real book I took, no, in that it has been given. I've explained what is capital reserve and reserve capital. Please go through in that once. Still, if you have doubt, just get back to me. I'll handhold you. Don't worry. Okay. So now the catch here is that if in question capital reserve is given, only if it is realized in cash, such capital reserve you can consider. If any capital reserve is created where cash is not collected, then that capital reserve is not to be used for the purpose of issue of bonus shares. So first rank is CRR, second rank is capital reserve, and third is security premium reserve. This also should be received in cash. For whom? For listed companies. For unlisted companies, it may or may not have been received in cash. We are not bothered. So on which circumstances or scenarios the security premium is not received in cash? Tell me. When I issue the shares for consideration in cash, and when I get premium over and above the face value, then that SPR is coming in cash. So which circumstances or under which circumstances SPR is there getting credited but money is not coming? Issue of share. Yesterday we saw an example. Issue of share to whom? We bought a machine. To vendor we issued the shares at premium. So when we issued the shares at premium, that fellow did not pay me any premium money. So whenever issue of shares is done for consideration other than cash, means what? Shares issued to promoters, underwriters, vendors, or to any company whose business has been taken over. And if these shares are issued at premium, in that case, the premium is not collected in cash. So therefore, that is not been considered for the purpose of issue of bonus share if you're a listed company. Unlisted company, no problem. Please be very careful with that. So this is my third rank. Fourth rank is what? Once you have exhausted CRR, capital reserve, SPR, still you need more money for bonus issue. Then you look up to free reserve. In free reserve, what is the first rank? General reserve, P&L, and surplus. So this is the order which you will deplete the reserve one by one. So revaluation reserve also you mention and cut it. Why? Revaluation reserve is not the realized profit. You don't realize any profit. What is the entry for revaluation? If there is an increase in land value, land account debit to revaluation. Did you get any money upon selling the land? Sir, we did not even sell the land. The land value just we increased because we felt that the market value of the land is high and therefore we increased the value. Did you receive the money? No. So revaluation reserve is a notional profit, unrealized profit, imaginary profit. So can I transfer my imaginary data to capital account? Let's suppose I want 1 crore rupees to establish a branch in, let's suppose, Chennai, Hyderabad. 2 places I want to establish an academy. Now I'm capitalizing my profit. So in revaluation reserve, 1 crore is there. My imaginary figure that I'm transferring to capital account. Let's suppose Hyderabad vendor is telling, sir, for setting up this academy, please transfer 50 lakh. Can I transfer my imaginary number to that fellow's bank account? I have a land, boss. Currently, it is worth 1 crore rupees. I bought it for 1 rupee. Currently, it is 1 crore rupees. I have not sold the land. So there's a profit of 1 crore. In that 50 lakh rupees, you keep it. How to keep it? Imaginary. Telepathy. Is it allowed? Not allowed. So therefore, imaginary profit can never be issued for the purpose of bonus shares. Clear with this point? Online people, okay, not okay?
Yes, sir.
Whatever we are discussing is all yesterday's point. I'm just trying to recollect it. So bonus shares shall be issued from the following, and the following rank and order has to be followed. First is capital redemption reserve. Second is capital reserve. It has to be collected in cash. Security premium reserve, same. Listed company means collected in cash. Free reserve. Free reserve means the reserve that is available for distribution as dividend. Example, general reserve, P&L balance and surplus. Very good. Bonus shares cannot be issued out of revaluation reserve because revaluation reserve is a unrealized or notional gain. And in case if you come across any other reserve in the question, and if you feel that is not unrealized, even that is not to be considered for the purpose of issue of bonus shares. Online people, okay, not okay?
Okay,
Yes,
sir.
sir.
12 and 13 point, keep it pending. I'll be discussing in some time. Next point is 14 point. Security premium, very clearly they said that for listed companies, SPR must have been realized in cash. For unlisted company, SPR may or may not have been realized in cash. Clear with this point? So we discussed 12, we discussed till 11th point yesterday and then 14 point yesterday. So today what are we supposed to discuss? Point number 12, 13 and 15 and 16. Clear? Okay, now guys, there are three different types of question that you will come across in this particular chapter or unit. First is a scenario where the equity shares, what is given in question, is automatically fully paid. We saw one illustration one yesterday. In that we saw the question, it very clearly said that the bonus what we are going to issue to the existing shareholders, that particular shareholders old shares has been fully paid up. So issuing of fully paid bonus shares, you're issuing bonus share to the existing shareholders whose face value is fully paid up. In that scenario, two entries we learned: reserve account debit to bonus to shareholder and bonus to shareholder to equity share capital. This is one scenario we saw. Case one, I would say. This is case one. Case two is a scenario where the company is not called up the full face value. If the face value is 10 rupees, the company is so far only called up 8 rupees. Now the company wants to issue bonus share, but it cannot issue the bonus share because the shares are partly paid up. So what is the company first supposed to do? Make the final call. Make the final call and ask the shareholder to pay the money. So once the share is being called upon, the final call is made. What is the journal entry when the call is made? When the final call is made, what is the due entry that you pass? Equity share final call to equity share capital. Now, the moment you credit equity share capital, guys, what happens? The face value of the share capital now becomes from 8 rupees to 10 rupees. The moment you pass the first entry, guys, equity share final call account debit to equity share capital, now the partly paid up capital becomes fully paid up capital. Now you are in position to issue the bonus shares. So this is my due entry. Very simple entry, guys. This is not something very different. Whatever we have studied in the company's issue of share capital topic. Correct, no? The entry for final call is what? Equity share final call account debit to equity share capital. In case if the money is received, then what is the entry? Sir, bank account debit to equity share final call. Any problem? So what is the nature of equity share final call there? It is a temporary asset. Temporary asset. Asset has always got debit balance. And this will go and sit in the asset side of balance sheet. So what is the meaning of asset? So anything that we own is asset, or anything that we expect to receive in future is asset. Anything and everything that is recorded on the asset side, either you own it or you have the expectation to receive in future. Land, you own it. Plant and building, own it. Machinery, own it. Inventory stock, own it. Cash, you own it. Debtor, expect to receive in future. The money which is there in the bank, whenever you demand, you get in future. Expect to receive in future. Correct? So asset means what? Anything that you own is asset, or anything that you expect to receive in future is asset. So equity share final call debit means what? I have expectation to receive this final call money from my existing shareholder. This is what it means. Any problem here, online people?
No, sir.
No, sir.
No problem. Very good. Now here, if you are given a question where the shares are partly paid up, the first segment is what? Pass these two entry, where you'll make the partly paid up share into fully paid up share. This is one segment, one stage. Second stage is normal stage. What is that second stage? Sir, all the reserves account debit to bonus to shareholder and bonus to shareholder to equity share capital. Any difficulty? Very easy concept. So can we do one question also based on this?
Yes, sir.
Others online people, please respond.
Yes, sir.
Yes, sir.
Okay. So please take your question number, illustration number 3. 2, keep it on hold. It's a different concept. So we'll go to illustration 3 and come back to illustration 2. Following notes pertain to balance sheet of Solid Limited as at 31st March 22. So can I say this is the notes to accounts for which financial year? For financial year 21-22. Wonderful. Now full concentration, please, no deviations. Authorized capital is given. Yes, authorized capital is given. Look at the authorized capital and tell me what are the two classes of shares that has been given here. Sir, one is 12% preference share category, one is equity share category. If you look at preference share, 10,000 quantities of or 10,000 numbers of 12% preference share of 10 each, 1 lakh, and 1 lakh equity shares of 10 each, 10 lakh. So what is my total authorized capital? 11 lakh rupees. Can somebody tell me what is the meaning of authorized capital? Authorized capital is registered capital, nominal capital is the alternative names. I'm asking the meaning. Authorized capital is the maximum capital that the company can intend to raise during its lifetime. And this authorized capital, where it is captured while incorporating? In the memorandum of association. Under which clause? Under the capital clause. Now, in case I recorded 11 lakh rupees as my authorized capital, but later there is a requirement to raise more capital. What am I supposed to do? Amend the memorandum of association. In that, amend your capital clause. Resubmit the new MOA with the ROC. He will approve it. And once the authorized capital is further, the bar is increased, then you can go ahead with the further issue. Are you able to follow? This also we discussed. Wonderful. Now, issue and subscribe capital. Now, the reason why I'm asking this is because whatever I just explained has got something to do with this question now. That is the reason I've discussed this point with you. So, issued and subscribed capital. What is issued capital? Sir, issued capital is basically the number of shares that has been offered and allotted to the public. Issued is what? Number of shares offered to public. In that, whatever people are subscribing, that is called as subscribed capital. So 10,000 rupees is the authorized number of shares. In that, how much did you offer and allot to the shareholders? 8,000. 10 rupees. So 80,000 rupees is collected out of 1 lakh rupees. So how much preference share can be further issued in future? 20,000 more. That is 20,000 amount more, 2,000 number of shares more. If I want to do 3,000, then what am I supposed to do? For the extra 1,000, I have to amend the MOA. Clear with this point? Then out of 1 lakh equity shares, how many shares has been offered to public and subscribed? 90,000 has been offered to public for subscription. Of 10 each, 8 is paid up. 8 is paid up means what? Whenever they say 8 is paid up means 8 only is called up and 8 only is being paid up, which means final call of 2 rupees yet to be called upon. So out of 10 lakh rupees, we issued for 9 lakh. In that 9 lakh rupees only 7.2 lakh is being called upon so far to be paid. So can I say this is a question of partly paid equity shares? All people, can I say this is a question of partly paid equity shares? Tell me yes or no.
Yes, sir.
The question will not explicitly always tell you this is a partly paid question. You should read the question, understand the question, and accordingly do the solution. Next is reserves and surplus. They have given general reserve is 1,60,000, revaluation reserve is 35,000. So revaluation reserve is like a bubble. In that only air is there, nothing else is there. Then security premium bracket they mentioned collected in cash. Then profit and loss account 2,05,000 rupees. Wonderful. Secured loan 12% debenture at 100 each, 5 lakh rupees. No problem. Now, on 1st April 2022, the company has made final call of 2 each and 90,000 on 90,000 equity shares. Full stop. The called money was received on by 20th April 2022. Lucky you are in this question. Had they given the first two line means you are lucky. So when the question says 2 rupees is called, you'll immediately pass the due entry. And when the question is saying the money is received, you'll immediately pass the money receipt entry. Now let's suppose the entire same question is given as it is. And the company is going ahead with the bonus issue. But first two lines is missing. In that case, what are you supposed to do? You have to assume that the call is made and you have to pass the due entry. So this is one testing what ICAI can do. What they will do, they'll give you the entire question as it is. First two line alone, they'll not give you. And they'll tell you that bonus has been issued. All of you know that bonus cannot be issued to the partly paid equity shares. So your duty is what? Had the company issued bonus share, before that what they should have done? Can call the remaining amount, get the money and then go ahead with the bonus shares. So if the question is silent about that, you have to pass the due entry and the receipt entry. Am I clear with that point? But in this question, lucky, even if you had forgotten that point, the question is reminding you, please collect 2 rupees from the shareholders and pass the entry for that also. The question is reminding. So Jujjupi question this is. Then thereafter, the company decided to capitalize its reserves. Capitalization of reserves means what? Issue of bonus shares by way of giving bonus, by way of bonus at the rate of 1 share for every 4 share held. So my question goes to all of you. What is the bonus ratio? 1:4 or 4:1? 1:4. So 1 always represents the first part. Numerator always represents the number of shares that we are giving as bonus. And the denominator will always represent the number of shares that we are already holding. So bonus ratio is 1:4. Show necessary entries in the books of the company. Necessary entries means what? So right from call being made, the last call being made for 2 rupees, then the money being received, then the capitalization of reserve, finally the capital entry. So 4 entries you have to pass in total. And not only that, and prepare the extract of balance sheet immediately after the bonus issue, assuming that the company has passed necessary resolution at its general body meeting for increase in authorized capital. Now this line I'll explain you at the end when we do the final balance sheet. So in this question, what are they trying to tell you? Sir, please pass a journal entry for those 4 scenarios, and then don't stop there. You have to prepare the balance sheet as per the new Companies Act format. So with whatever data they've given here, authorized capital, issued capital, reserves and surplus, secure loan, you have to prepare the extract of the balance sheet as per Companies Act. Which schedule? Schedule 3 of Companies Act 2013. Chalo, fantastic. So what will be my first entry? Okay, what should be my heading first? Fast. In the books of? Very good. Solid Limited. Please do it. Online people, are you all doing it along with me?
Yes, sir.
Yes, sir. Yes, sir.
In the books of Solid Limited. Journal entries. Date. Particulars. LF. Debit rupees. Credit rupees. So what is my first entry? What is my first entry? Equity share. Who said capital? Equity share final call account debit to equity share capital. Can you write ESCN come in exam? No. How many number of shares? 90. Sir, 90,000 shares that we have already issued. No, from that 2 rupees we have to collect. So 90,000 into is how much? 1,80,000 rupees. So 90,000 into is how much? 1,80,000 rupees. have a question to all of you. Here, we are issuing the bonus share only to equity shares or both to equity and preference? Only to equity. Thereafter, the company decides to capitalize its reserve by way of bonus at the rate of 1 share for every 4 share held. And this line is in continuation of the first two line. And where the final call is made only for the equity shares. But my question goes to all of you. Can we issue the shares to preference shareholders or not? Sorry, bonus shares to preference shareholders or not? Anywhere in the Companies Act 2013, have they restricted that we cannot issue the bonus share to the preference shareholders? Not at all. In my knowledge and opinion, I've never seen any statement where they say that you cannot issue the bonus share to preference shareholders. But in my opinion, I don't feel there could be any logic in issuing the bonus share to preference shareholders. Tell me why. Already they're enjoying preference. Okay. But solid reason. There is no benefit to the company. When I issue the bonus share to equity shareholder, what happens? The money from the reserve is getting transferred to capital. And we don't redeem the equity share capital until the company is wound up. But preference shares are not like that. Preference shares we have to redeem after a stipulated period, after 5 years, 10 years, 15 years, max to max 20 years. So if I have a preference shareholder, if I'm issuing the bonus share to him, the money gets transferred from reserve to capital. But 5 years down the line, 10 years down the line, or 20 years down the line, that money I have to repay it back. So what is the benefit for the company? Already, as Nirajana said, preference shareholders are enjoying two preferential rights. Right to repayment of capital, right to dividend. On top of that, why again I should give the reserves just like that to somebody? So generally, it is not logical for any company to issue the bonus shares to the preference shareholder. In case if they want to issue by any reason, I think they can issue. There is no stoppage in the Companies Act that you cannot issue the bonus to preference shareholders. But in your entire syllabus, all the questions, here the bonus share is always issued only to the equity shareholders. That type of questions only is being given. But mentally be prepared that if the question says that no preference share bonus we are giving means, then according the entry will be changed. Instead of equity word, it will be preference. Rest all it is same. Online people, okay or not okay?
Yes, sir. Okay, sir.
Yes, sir.
Fantastic. Now, due entry is passed. All of you know how to write the narration. We'll manage it. Or should I teach like Amul baby? I'll teach. Gokul?
No, sir, we do it.
Okay. What is the second journal entry? Sir, money is received. So money is coming in bank account. Debit the receiver. Bank account debit. Bank is receiving our money. So bank account debit to equity share final call account. How much? 1,80,000. 1,80,000. Narration is very important. Please do not miss out on the narration. The first entry is happening on 1st April. I think second entry also they have put it. No. The second entry, the date is received when on 20th April. So guys, date is given. Please do not miss out on the date. So 1/4/22 and 24/22. So guys, now upon passing the first two entries, we have converted the partly paid equity shares into fully paid equity shares. Now, can the company initiate the proceedings of bonus issue? Check articles of association, get approval from the shareholders, etc., etc. Formalities is completed, and then bonus is being issued. Now, how much number of shares are issued? Working note number 1. Calculation of number of bonus shares. Number of bonus shares. 90,000 into 1/4, which is 22,500 is the number of shares that we are issuing. This is number of bonus shares, not the value amount. Guys, 90,000 rupees is the, 90,000 is the quantity of equity shares. And the ratio is 1:4. So I'm going to issue one bonus share for every 4 held. So what is my ratio? 1/4. How do we derive this formula? Using vegetable vendor technique. Can somebody explain? Sir, for every 4 shares held, I'm going to give 1 bonus share. Therefore, if I'm holding 90,000 bonus share, 90,000 equity shares, then what would be the proportionate bonus shares? Let me repeat one more time. Question says that for every 4 equity shares held, one is the bonus share. Therefore, for currently 90,000 equity shares, how much is the bonus? Cross multiply. So 90,000 into 1/4. So all your so-called formulas is derived using VV technique. It's called as vegetable vendor technique. What is vegetable vendor technique? 3 kilo tomato, 60 rupees. Then for 1 kilo, how much? We studied in mathematics, lower grades. Same technique has been applied, and from that only majority of your accounting formulas has been derived. So if you know this technique, there is no need for you to by heart the formula. Each and every formula will make sense. You don't have to sit and by heart any formula. So please tell me, people, what is the bonus shares in rupees? So 22,500 shares we are issuing, and what is the face value of each share? Into 10 rupees. So how much is the amount? Rupees 2,25,000 rupees. So we need totally 2,25,000 from different types of reserves. So come back to the question and tell me which reserve are we supposed to exhaust first. If I go with the format, first is CRR. Is anywhere CRR given here? Not there. Second is capital reserve in cash. Is capital reserve given here? No. Third is security premium reserve. So third is security premium reserve collected in cash 20,000 rupees. So let's go back to the journal entry. Security premium reserve account debit 20,000. Next is after security premium reserve, next is free reserve. In the free reserve, what is the first item? General reserve. So general reserve 160. But total how much money we need? 2,25,000. In that 2,25,000 rupees, if 20,000 rupees is gone into SPR, how much is the balance required? 2,05,000. In that we are taking 1,60,000 from general reserve. So how much money is more required? Use your calculator. 45,000 is required. You'll take it from revaluation reserve. Sir, revaluation reserve is a balloon, sir. Useless fellow, dummy fellow. You'll go with P&L account. So I'll take full 2,05,000, I'll put in credit. If you put 2 lakh full 5,000 in debit, what will happen? The debit and credit will not match. How much will you take? Only 45,000 rupees. So security premium reserve account debit, then general reserve account debit, which is how much? 1,60,000. Very good. Then profit and loss account debit 45,000 to equity share capital. Online people, nobody is responding. To bonus to shareholder. How much? 2,25,000 rupees. Online people, are you all there?
Yes, sir.
Yes, sir.
Okay, please respond now. Next entry. Sir, this is a temporary liability that you have created. Now, what are you supposed to do? Cancel the temporary liability and create a permanent liability in the equity share capital account. So, bonus to shareholders currently in credit. To cancel a credit, I have to give a debit. So, BONUS, bonus to shareholder account debit to equity share capital 2,25,000 rupees. 2,25,000 rupees. Any problem? Online people, any problem?
No, sir.
No, sir.
This question should be somewhere in the range of, I think, 5 mark to 10 mark. I think this might come for 5 to 10 marks, somewhere in that range. So journal entry is done. Next is what? You have to prepare the extract of balance sheet. So balance sheet format, all of you know. balance sheet format and the notes to accounts. So first, which will you prepare? First, notes to accounts.
Notes to accounts.
Yes, but balance sheet, you prepare the structure and keep it. When you complete the notes to accounts, then come and fill the balance sheet part. So balance sheet heading. As on which date? 1/4 is it? 30th April. Wait. See, all this is happening in the month of April. So here, what have they taken? They've taken 30th April as a balance sheet date. As on 30th April 2022. In bracket, do not forget to write and extract, because this is not a full balance sheet. It's an extract. Particulars, note number, amount in rupees. So how many categories are there? Can you please tell me in the liability side under the new balance sheet format? First category is shareholders funds. Very good. Second category is share application money pending allotment. Third is non-current liability. Fourth is current liability. So first one is shareholders funds. Shareholders funds. Under that, what is the how many items are there under shareholders funds? First item is
3,
share
sir.
capital. 3 are there. Share capital is first item. Second is reserves and surplus. Third is share warrant. This is what is the power of revision. So under that, share capital. Share capital. Note number 1. Second is reserve and surplus. Note number 2. So now we have to go to note. Note 1. I'm just showing the note 1 in the main balance sheet. Observe, then do it. Don't do anything. Just observe. Just observe. Notes to accounts. Guys, don't do anything online, people. Just observe what I'm doing. First one is share capital. Note number 1. Under that, authorized share capital. This point is not required. This point is not required. Heading, note number 1, share capital. Next is authorized share capital. Please tell me, what is authorized share capital for preference share? Online people? Online people, no response. Authorized capital as given in question for preference share is 10,000. How much is issued? 8,000. Anywhere in this process, did I further issue any preference share? The answer is no. So authorized is same as it is, no change. So here, authorized share capital for preference share it is 10,000, 12% preference share of 10 each, same 1 lakh rupees. But come to equity shares. How much is authorized? 1 lakh number of shares has been authorized. In that, how much did you already issue? 90,000 is already been issued and allotted. How much further you can issue? Only 10,000 equity shares. But how much did you go and issue? 22,000 shares has been 22,500 shares has been further issued. Guys, I repeat one more time. Online people, please listen very carefully if you have not listened to me. The authorized number of equity shares. What is authorized capital? It is the maximum capital that the company can issue during its lifetime. Beyond 10 lakh rupees, I cannot collect single rupee, single penny from the equity shareholders any further. Out of 10 lakh rupees, how much I have collected? 720 in the past and 1 lakh 80 now. put together how much? 720 plus 180 is how much? 9 lakh has been collected. 9 lakh money is collected. So out of 10 lakh rupees, if 9 lakh is collected totally, 720 in the past, 720 in the past and 180 now, put together is how much? 9 lakh if I've collected now, how much more money can collect? So from 10 lakh, if I minus 9 lakh, I can collect maximum 1 lakh rupees. But we issued further 2,25,000 worth of shares amount. So here, have you not or are you not in position to violate your Companies Act? Because Companies Act very clearly said that you cannot issue the shares beyond what is authorized. Your issued and subscribed capital can never be more than authorized number of shares. But here what has happened? You have issued 22,500 shares. So 90,000 plus 22,500 is how much? 1,12,500. This is a violation of the law. So what would have happened here? So here, before the company proceeded towards bonus share, it would have amended its MOA. That is why the question last line very clearly they said that assuming that the company has passed necessary resolution at its general body meeting for increase in authorized capital. So what is the first step here? First, the company will call for a general meeting, either AGM or EGM. In that, what they will do? They will discuss 2 points and 2 approval will be taken. One approval saying that, sir, we want to give bonus shares. And this is the reason behind giving the bonus shares. So please approve. Who will approve? Shareholders in the GM will approve. So one, that approval happened. Second, if the company is deciding to issue bonus shares, now the authorized number of shares is not sufficient. Therefore, the company will say, see boss, now you're approving for bonus shares, no, but authorized capital is not there. We are falling short of authorized capital. So please give us approval to increase the number of authorized shares, to which the shareholders also will agree. So the process of getting the approval and green signal from the shareholders in the GM meeting is called as getting necessary resolutions at the general body meeting. GM is nothing but general body meeting to increase the authorized share capital. Now, once that approval is come, what are they supposed to do? In the MOA, they have to amend the capital clause, and along with that amendment, they have to attach the copy of resolution. Copy of resolution is means what? A documentation. It's a proof that in the general meeting, we all agreed to increase the shares. So like that, when approval is given in form of a resolution. So this resolution copy and the amended MOA, you have to submit to whom? ROC. ROC will go through everything and give the green signal approval. Okay, go ahead. So once the ROC is giving the approval, now your authorized number of shares from 1 lakh will become to 1,12,500. So the question is assuming that all these formalities is being completed, because we are not doing law now. We are doing accounting. So we are presuming that the law department is taking care of all these formalities, and then they're coming to us. So now what is the authorized capital when the law department is coming to you? The authorized capital is no longer 1 lakh. It is already increased to 1,12,500. Therefore, in the extract of the balance sheet, which authorized number of shares will you incorporate? 1,12,500 and not 1 lakh. So people out of anxiety or excitement, what they do? They put 1 lakh 1 lakh number of shares and come. This is wrong. So this is a catch here. Please take a highlighter, highlight this point. Put 1 lakh here and cut it. And write 1,12,500. This is because of increase in authorized number of shares. Online people, okay, not okay?
Okay,
Yeah,
sir.
sir.
Okay, sir.
So what is your revised authorized capital, equity share capital? 1,12,500 into 10 is 11,25,000 rupees. So 1 lakh is preference share and 11,25,000 is equity shares. Now don't write it, just wait, no? I'll give you time. Just process this, keep in your mind. I'll give you some time. No, that time you recollect it from your memory and write it. No, just observe. Next is issued and subscribed. Issued, subscribed, and fully paid share capital, because all the shares are now fully paid. The moment all the shares are fully paid, it will become fully paid up category. How many preference shares is authorized? 10,000. How much was issued so far? 8,000. So 8,000 only will come. So 8,000, 12% preference share of 10 each, 80,000. But for equity, it is not the same. For equity, earlier what was given? 1 lakh authorized, 90,000 was issued. But now 90,000 plus 22,500 means how much? 1 lakh 12,500. So 1 lakh 12,500 equity shares. So what did we learn in the last class? So whenever the bonus shares are issued, the number of equity shares will increase. That's what we saw now, the third point. So 1 lakh 12,500 of 10 each fully paid. 11 lakh 25,000. In bracket, they have mentioned that this one in this 1 lakh 12,500, 22,500 is because of issuing equity shares by way of bonus. This you have to write it. This you have to write it because the person who's reading the financial statement needs to understand how come from 90,000 it became to 1 lakh 12,500. Because the person who had read the previous balance sheet, he'll have the data in mind, no? Then he'll be wondering why did the increase happen. So when he reads this line, he'll understand that, oh yes, it's because of the bonus issue. So like that, the capital is coming here. And this amount of issued, subscribed and fully paid up capital, 12 lakh 5,000 is what will travel to your face of the balance sheet. In the face of the balance sheet, note 1 you've written, no, here only 12 lakh 5,000 rupees will come. So what happens? How do you read balance sheet? When you look at the balance sheet of any company, you will look at this value first. And you would want to understand how this value came. Is this comprising of equity, preference both, or only equity? So you want to know means what will you do? You'll refer note number 1. So you'll go to note number 1 and see, Acha, this is the authorized capital of the company. So much is preference, so much is equity. After that, so much is issued, so much is subscribed, so much is paid up. All the extra drama will happen in the notes to accounts. So extra breakup is given in the notes to accounts. If I still want to go further deep in accounts, the only possibility is scrutinizing of the ledger accounts. That is the next step, which as a chartered accountant, you will do in your articleship when you do the auditing. Okay. Now, what is the next part? You see here in the question, they've given information about the capital part. They've not only given you the information about the capital, there's something information about reserves and surplus also. So reserves and surplus, which note number? Note 2. So how do you present your reserves and surplus? Note number 2, reserves and surplus. Don't do anything, just observe. So for each category, you have to tell me. Guys, general reserve, how much is the balance? Sir, earlier opening balance is 160. In this 160, how much did you use? Sir, full 160. So 160 minus 160 is 0. So general reserve less utilized for bonus issue. So balance in the GR is 0. Then we used revaluation reserve. Did we use it? Sir, no. So revaluation reserve, opening balance also 35, closing also 35. So straight away write the final amount in the outer column. Then security premium reserve, sir, 20, full 20 has been utilized. So security premium reserve 20 was opening balance and utilization 20,000. So balance is nil. Is it getting bored? Little bit? No. Okay. Profit and loss account, total opening balance is 2 lakh 5,000 rupees. In that, how much have you utilized? Sir, 45,000 has been utilized. So balance is 160. So what is my balance reserve totally left? So 35,000 reval and 160 is P&L credit balance. So total is only 195 reserve. So this 195, where will you record? In the face of the balance sheet. 1,95,000 record in the face of the balance sheet. So don't stop here. If you go back to the question, guys, at the end, they have given the secured loan. Loan means which category it will come? Non-current liability or current liability? Non-current liability. How do you know this is non-current? In the question, I told you, if the repayment of debenture term period is not given, always it is repaid beyond 1 year. So assumption is always it is long term. The question specifically says that the debenture is going to redeem within 1 year. Then it is current liability. Otherwise, this is a non-current liability. So under non-current liability, which category will record debenture? Long-term borrowing. Long-term borrowing category. Wonderful. So in long-term borrowing, under that the category secured category. Secured debenture means what? This debenture is secured against assets of the company. This also we discussed. Fixed assets, sorry, fixed charges and floating charges. Correct? Debenture secured by fixed charge. What is fixed charge? Fixed charge means what? Why, man? You guys watched debenture topic, no? I gave the classes. Didn't watch. Okay. Ninga? Capital. You finish it fast. That's why we started late, no? So that you can finish off the capital debentures first, then this will make sense. Karan Ninga? So by coming week, can we expect to finish? Saturday, Sunday is there, no? A little bit of extra time you can put in. What is fixed charges? When a loan is secured against a particular asset, it's called fixed charge. If a loan is secured against a group of multiple assets, it's called as a floating charge. Correct, no? Please recollect. Where did you study this? Debentures where? Where in debentures? Very good. Anyways, so 12% debenture of 100 each, 5 lakh rupees. So in the face of the balance sheet, 2 will be non-current liability. Under that, A, long-term borrowing. Note number 3, 5 lakh rupees. This is the presentation. This is the presentation. So I'll give you 4 minutes of time to complete this balance sheet as well as notes to accounts. Don't copy, just try to recollect from memory whatever you have learned so far. 3 minutes, guys. Fatafat. Online people, all of you have textbook with you?
Yes, sir.
Yes, sir.
Okay. Done? Please take a highlighter and highlight this part alone. This is one place where you'll make a lot of mistakes. So please highlight this point. So when you highlight it, whenever you revise next time, no, immediately when you flip the pages, your focus will go on the highlighted point. Whenever you practice any questions, do not copy paste any value from the textbook. Use your calculator. Please calculate and write it. The hall should be full of calculator noise. Tuck, 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 tuck. That noise should be there. Best music which any CA can crave for. Online people, what is the status? Done? Doing? Not doing?
Doing, sir.
Only one responded. Who responded?
Doing, sir.
3. That's all.
Completed, sir.
Super. Others?
Completed, sir.
Okay, super. The last note number which is given to you. Let's have a look at it, guys. Attention. It has to be ensured that the authorized capital after bonus issue should not be less than issued capital, which in this case was there. What is authorized capital earlier? 1 lakh. Issued capital was 1,12,500. So which was issued capital is more than authorized. That is not right. Authorized can be more, but issued can be never be more than authorized capital. Correct? No. So what are we supposed to do? Ensure that your authorized capital should not be less than issued share capital. The authorized capital may either be increased by the amount of bonus issue or on the value of additional shares less unused authorized capital. Okay, fine. So basically what they're trying to say is basically authorized capital 90,000 is there. When in issued capital 90,000 plus 22,500 happens, it becomes total 1,12,500. So please ensure that if the issued capital at a point is exceeding the authorized share capital, ensure to increase the authorized capital at least equal to the issued share capital by completing the necessary formalities. So they could have put it in simple words, no problem. They've complicated, it's okay. So this is the second category of question, people. So what is the second category of question? So in this category, they are going to issue the bonus share. But initially, the equity shares are partly paid. So what are we supposed to do? First, we have to make the final call due. And upon receiving the final call money in the bank from the shareholder, convert the party paid to fully paid and then issue the bonus share. So this is case 2 that we have dealt with. So case 1, case 2, online people, all if you're comfortable.
Yes, sir.
Yes, sir. Yes, sir.
Now,
Yes, sir.
you want a break or can I go for case 3? Yesterday, I forgot to give you a break. Continue. Okay. Others? You must talk idea. Oh, yeah. Break. She was expecting, okay, somebody last break. Continue பண்ண சொல்லிட்டா அந்த லுக்கு கொடுத்தீங்க ரெண்டு பேருமே. Okay, let's take a quick break of 3 minutes. Only 3 minutes. 7:30 sharp we are starting. Thank you. Sorry, not 7:30. 6:30 sharp we are starting. Thank you. Yes, people, welcome back for the break. So let's continue. So now we are heading forward for the last segment of this topic or concept, where we are going to issue the bonus shares to partly paid equity shares. Now, this is something you might feel contrary to what we have discussed earlier. You said that, sir, we can issue the bonus shares only to the fully paid equity shareholders. Then what is this drama all about? So this is a drama where a particular shareholder, let's suppose, 1,000 shares are issued at the rate of 10 rupee per share. So what is the total authorized capital? 10,000. Now out of this 1,000 rupees, the company is so far called upon only 8 rupees. So 8,000 rupees is so far collected. So how much is the uncalled capital? 2 rupees. 2 rupees per share, and for 1,000 shares is 2,000. Rightly said. Now here, bonus share is given in two ways. One, bonus share is where you're giving extra shares. To whom? To the existing shareholders. This is one example. That is what case 1 and case 2 is about. Now case 3 is a situation where we are not going to issue extra shares. We are not going to issue any extra shares. What we are going to do is that the difference of 2 rupees is there. No, this 2 rupees, we will not collect any money from the shareholder. Rather, we will transfer the money from reserves to capital. So in a way, we are converting this partly paid shares to fully paid share, where we are not collecting money from the shareholders. Instead, we are capitalizing our reserve. So here, can I say to the extent of 2,000 rupees, the shareholder need not have to pay the money. But he is the owner of 10,000 rupees. So this is also kind of a bonus only, no? This is also kind of advantage that you're giving to the shareholder, correct? No? You're telling that shareholder, I'll pay you. Sorry, I'll give you 10,000 rupees worth of share. In that 8,000 rupees you paid, and balance 2,000 rupees you don't pay me. I'll capitalize through my reserves. So this is case number 3, where you're not going to issue any additional share to the existing shareholders. No. Instead, whatever is the uncalled capital, that capital you'll call upon, and that money is transferred from the reserves of the company to the capital account. So, but the question that arises is that, so this 2 rupees when you're transferring from reserve, from which reserve you're allowed to transfer? You are allowed to transfer this only from your free reserves. This you are allowed to be transferred only from free reserves. So here comes point number 12. If there is any unpaid amount on shares held by existing shareholders. So 10 rupees the face value, 8 rupees is called upon and paid upon. So what is unpaid value? 2 rupees. So unpaid amount of rupees 2 on any share held by the existing shareholders, that for that amount, what you can apply? Only free reserves can be used. CRR, capital reserve, and SPR cannot be used. Right? So let's see the journal entry for this. So first entry will be, guys, you are calling and passing the due entry. So what is the due entry? Equity share final call account debit to equity share capital. Equity share final call account debit to equity share capital. When you pass this entry for 2 rupees or 2,000 rupees, what is the position of the balance sheet after the first entry? Sir, in the balance sheet, equity share capital becomes 2,000 extra, plus 2,000 will happen. And equity share final call will be plus 2,000. So this 2,000 gets added to capital account, and this 2,000 rupees is asset which I am expecting to receive in future. But if I record this amount in equity share final call account, who is under obligation to pay this 2,000 rupees? The shareholder. Because whenever we see the word equity share final call, we remember to collect this money from whom? Shareholder. But is the shareholder going to pay this money? No. So therefore, I need to change this name. So what will I do? The equity share final call, which is in debit, I'll cancel it by giving a credit. So what is my second entry? So to equity share final call. The moment you put to equity share final call, what will happen in the balance sheet? In the balance sheet, this will go away. Can we make this go away? No, sir, we are yet to adjust the money, receive the money. So debit part is pending. So what will I put in debit? So now the debit will be bonus to shareholder. Bonus to shareholder. The moment bonus to shareholder means what? We have to receive this money from shareholder, but shareholder will not pay. It has to be capitalized from reserves, because the word bonus means what? Capitalization of reserves or profit. So the moment you put bonus to shareholder in debit, now in the balance sheet, what is coming on asset side? Bonus to shareholder ledger. So this money has to come from bonus to shareholder, as if that it means. So what is my first entry? Equity share final call to equity share capital. So to the extent of this 2,000 rupees, you made the person owner, but money is yet to be received from the shareholder. In this case, you cannot expect any money from the shareholder. So this debit I need to cancel by giving a credit. So I gave a credit to equity share final call. So if something is removed from debit by giving a credit, in place of that, some other debit should come, no? And that debit is bonus to shareholder. The moment you put bonus to shareholder, so this is how your balance sheet is looking like. But still, this 2,000 rupees on the asset side. Are you going to receive this money from anybody? No. So you have to cancel this bonus to shareholder by giving a credit here. So where this money is coming from? Sir, reserve. Which reserve? Free reserve. So CRR cannot be used because this is not a bonus issue. This is not typically a bonus issue. Bonus issue comes where? Fully paid equity shares. So here CRR, capital reserve, SPR, revaluation reserve cannot be used at all. So we're transferring the money from reserve account to the capital account for the purpose of converting the partly paid share to fully paid shares. In that case, you're allowed only to use free reserve, that is general reserve, P&L or surplus. Any problem? So that is why in point number 12, very clearly it is mentioned that CRR, CR and SPR cannot be applied, cannot be utilized towards or for the payment of unpaid amount of 2 rupees on the share held by the existing shareholder. What can you use it? Only free reserve, that is GR and P&L can be used it. You cannot use any other reserves. So that is why in this PDF, specifically I have highlighted this in red and given so that whenever you go through, you'll understand this should not come. So that is the kind of visualization that I'm trying to give you. So this PDF will be shared with all of you. Please take a printout and keep it with you. So like that, all this copies, soft copies here and there, I'll keep on sending it to all of you. Keep it a pack ready. Any problem? Online people, any problem?
No, sir.
No, sir.
So if this is clear, let's go to illustration 2, which is a question based on this concept. So illustration 2 says that pass journal entry in the following circumstances. First case. A limited company means which company? Public limited company with subscribed capital of 5 lakh. So 5 lakh is number of share or capital? It is capital because it is given in rupees. So with subscribed capital of 5 lakh consisting of 50,000 equity shares of 10 each. So 50,000 equity shares into 10 rupees, how much? 5 lakh. And this is subscribed capital, out of which what is the called up capital? Only 7.5. If 10 rupees the face value, only 7.5 has been called upon. So how much is uncalled capital? 2.5. The full stop. After this, the game changes. It says that a bonus of rupees 1,25,000 declared out of general reserve to be applied in making the existing partly paid share into fully paid share. So this is case 3. So here you're utilizing general reserve in form of bonus for converting your partly paid share into fully paid up share. So are we going to issue any extra number of shares here? No. In case 1 and case 2, we're issuing the extra number of shares, where your number of shares will increase, capital will increase. But here there is no extra shares that is being issued. Existing number of shares is being, the partly paid is being converted to fully paid. That's all. So now tell me people, how many shares? 50,000 shares into 2.5. How much? 1,25,000 shares. Exactly matching? Matching. So now, what is my first entry? First entry. You have to make the final call due. So what is the final call due entry? Equity share final call account debit to equity share capital. How much? 1,25,000 rupees. 1,25,000 rupees. So 50,000 shares has been subscribed into 2.5 rupees is 1,25,000 rupees. Now, the moment I put equity share capital in credit, you've made that person the owner of 125. But debit equity share final call indicates as if this money I have to collect from shareholder. But is the shareholder going to pay this money? No, because the question very clearly said that shareholder need not pay. From my reserve, I will still contribute. Who's saying? Company is saying. So in that case, this money has to come from the company. So debit, we have equity share final call. To cancel it, I'm giving a credit. So equity share final call, I'm giving a credit 1,25,000 rupees. So equity share final call is knocked off. From debit, it is gone. In place of that, what am I debiting? bonus to shareholder. Bonus to shareholder account debit 1,25,000 rupees. What is my third entry? Bonus to shareholder account is in debit. I have to close it by giving a credit. So to bonus to shareholder 1,25,000 rupees, and this money is coming from general reserve. If general reserve is not sufficient, we can take help of P&L or surplus. So GR account debit 1,25,000 to bonus to shareholder 125. Any problem? So they have changed the order and put it. You can write in the same order that I'm giving to you. No problem at all. So first entry you'll record is share final call to equity share capital. Then you'll reverse the share final call, and instead of that you'll debit bonus to shareholder. And third entry will be reversing bonus to shareholder and recording GR. This is the right order of understanding. Or you'll be confused that why GR is debited, why bonus is credited, and why again we are debiting it. All confusion will happen. So whatever story I narrated, as per that, this is the right order. This is the right order. Online people, does it make sense?
Yes, sir.
Others?
Yes, sir.
Yes, sir.
Fantastic. Please complete the entries fatafat. Done? What happened? Okul? All good? Now, next question. A limited company. Can I start? Yes. Girls, online people, can I start with the second part?
Yes, sir.
Yes, sir.
Yes, sir. Yes, sir.
Okay. Now, a limited company having fully paid up capital of 50 lakh consisting of equity shares of 10 each. So, limited company having fully paid up capital, 50 lakh rupees is capital consisting of equity share of 10 each. So, what is number of equity shares? 5 lakh. So, number of equity shares is 5 lakh. Online people, do you all agree with me?
Yes, sir.
Yes, sir.
Okay. Each and every line we have to understand. Okay. And sorry, Kama. They had a general reserve of 9 lakh. Okay. There's a general reserve of 9 lakh. No problem. Full stop. It was resolved to capitalize rupees 5 lakh out of general reserve. It was resolved to capitalize rupees 5 lakh out of general reserve by issuing 50,000 fully paid bonus share of 10 each, comma, each shareholder to get one such share for every 10 shares held by him. So what is the bonus ratio? 1:10. How many number of shares are there? Sir, 5 lakh number of shares are there. If I apply the ratio, it is 1/10. 50,000, perfectly matching. So bonus ratio is 1:10. 50,000 bonus shares they are issuing. Into 10 rupees means 5 lakh rupees is the total money that we are supposed to capitalize from the reserve. Now, again, read the second half of the question. It was resolved to capitalize 5 lakh. Exactly 5 lakh is matching. How 5 lakh came? Sir, 50 lakh is total capital. Divide by 10 rupee per share means how many equity shares are there? 5 lakh equity shares are there. And the bonus is 1:10, 1/10. So how many number of shares we are issuing as bonus? 50,000. Each share value is how much? 10 rupee. If I multiply how much? 5 lakh. So how much do I need to capitalize? 5 lakh. And this entire 5 lakh is going to be capitalized out of general reserve. Now it is making sense. So it is fully paid bonus share. So please tell me, is this case 1, case 2 or case 3? Is this question of case 1, case 2 or case 3? Case? So this is a googly ball. Now let's see how much of you properly understood the concept. All in people, case 1, case 2 or case 3? What is case 3 about? So case 3 is a scenario where the shares are partly paid. The difference amount we are capitalizing from reserve. Is it case 3? So this is fully paid. The 5 lakh equity shares is there. No, it is what? Fully paid. Case 3, no, not possible at all. Only possibility is case 1 and case 2. What is case 2? Sir, again their shares are partly paid. Here any partly paid shares is there? No, it's fully paid shares. So it is case 1. Yes, this is how you have to respond. Now just think, no, we did the concept yesterday and today. When I ask a question, immediately if the spark is not coming, you put a bulb, tuck, it will come. Tube light, how does it come? Old tube light. Forget this LED. LED is as fast as bulb. Olden days tube light, no? That rolling tube light. If you put, it'll take some time to come. All of you guys are like that only. Why? Revision. Exam also same things happen, no? When you read a question, instantly you're not able to think of it. So where does the flaw lies into? Either conceptually you have not understood, or you've not practiced or revised adequately well. That is the reason you're not able to complete the paper on time. In the examination hall, when those 3 hours is given to you, you don't have time to sit and think what to do, what not to do. Should I do this? Should I not do this? Should I do this in this way or that way? You have no time, boss. The moment you read the question, everything should automatically start flashing in the order. If it is flashing just like that, no, which means you have done proper revision. You have conceptually understood. If that is not happening, till that happens, you have to keep on revising. This topic, you go anywhere, ask your people in other places where they study, they complete in 1 hour. Bonus shares. Yesterday we spent nearly about 2 hours. And today again 2 hours. 4 hours literally we are spending on bonus share. I'm taking it very gradually, trying to put the seed very strongly into your mind so that you don't forget. And like yesterday, how I said, if you do the revision also parallelly along with that, best thing that can happen to you is you'll never forget this concept for at least good amount of time. Let's say till exams, definitely I'm telling you, if you follow the revision technique, you will never forget. So what is my first entry, people? First entry. From reserve transfer to bonus to shareholder. So reserve to bonus to shareholder. Which reserve? General reserve. So general reserve to bonus to shareholder, and then bonus to shareholder to equity share capital. 5 lakh, 5 lakh. Any problem? Please write it. Online people, okay or not okay?
Okay, sir.
Okay, sir.
Okay, sir.
Okay, sir.
Done? Now, little bit of theory, guys. So we have completed 12 points and 14 point also is done. We're left with point number 13 and 15. So what is 13 says? If subscribed and paid up capital of the company exceeds the authorized capital. So in the previous question, after bonus share, what is your subscribed and paid up capital was? 1 lakh 12,500 equity shares into 10. So 11 lakh 25,000. Correct, no? That exceeded the authorized share capital. What is the initial authorized share capital? 1 lakh share into 10, which is 10 lakh. So your authorized was 10 lakh, and after bonus issue, your subscribed and paid up capital was 11 lakh 25,000, which is violation of the correct, which is violation of the MOA, Companies Act also. So if the subscribed and paid up capital exceeds the authorized capital as a result of bonus issue or because of bonus issue, then before this error happens, you're supposed to pass a resolution in the EGM to increase the authorized share capital first. And then that resolution along with the amended MOA shall be filed with ROC. To that point also I've captured it for you. This is not my own points. Up till point number 14 and point number 15, I have summarized the point which is given in your textbooks. All these words you find in the textbooks. So point number 14 is done. 15th, bonus issue has the following major effect. So what is the effect of bonus issue? share capital get increased according to the bonus issue ratio. Correct? First point, no doubt. Second point, it does not dilute the shareholders' equity. That is the percentage of the holding is same before and after bonus issue. Can you please explain me this part? Somebody. What are they trying to tell? There are 4 shareholders. Each contributed 25,000 rupees. Okay, so 1 lakh rupees is the total capital. Each contributed 25,000 rupees. So this is A, B, C, and D. 25,000 rupees each one of them contributed. So can you please tell me what is the percentage of the holding? What is the percentage of holding? You understand what is the meaning of holding? Out of the total capital, how much capital he has holding it? That is called as percentage of holding. So amount invested, capital contributed upon total capital into 100. So A contributed 25,000 capital out of 1 lakh rupees. So into 100, what is his percentage of holding?
25%.
25%. So all the 4, can I say 25%?
Yes, sir.
Now, bonus was issued. Each and every shareholder was issued extra 1,000 rupees worth of shares. So bonus in rupees 1,000, 1,000, 1,000, 1,000. Now, can you please tell me what is the revised percentage of holding? Sir, 25,000 initially contributed by A. His individual capital was 25,000 plus 1,000 if I add. So what is his individual capital now? 26,000. Do you agree with that, online people? Hello?
Yes, sir.
Correct.
Yes, sir.
When the individual capital increases, will the total capital increase or will it be same 1 lakh? Increase or no change? Fast. Inky pinky ponky. You cannot take so much time. Increase, no change. Increase. Online people, increase or no increase? No change.
Increase. Increase, sir.
Okay. Increase by how much?
No change.
No change. Somebody said no change. Very good. Who's that?
Navya.
Navya said no change. Okay. Others? Alvin, Danusha, Gurleen, Madhu, Isha, Shweta, Trisha, Yogi. No change or change? And all those who are changing, saying change. How much change? Capital increase by how much? 4,000. Navya madam, when 1,000 bonus has been given, what is the journal entry? Reserve to capital. So 2 equity share capital means your total capital is increasing now, na? It is no
Oh,
longer
only
1
capital. Yeah, it is increasing.
total capital increased by 4,000. So 1 lakh 4,000 into 100. Please calculate and tell me in calculator. Same
25.
25%. Because your numerator and denominator is increasing by same proportion, not amount. Same proportion it is increasing. Here the proportion was 25%. 1 by 4. Out of 4, 1 I contributed. In same proportion it is increasing here also. 4,000 is bonus total value. In that 1,000 is given. So in same proportion it is increasing. So therefore, it does not dilute the shareholders equity in percentage. Shareholders equity means what? Percentage of holding. So because of bonus issue, you cannot say from 25% his holding has become to 26%. No. Because the share is increasing in same proportion. Numerator and denominator increasing by same proportion, not same amount. Same proportion. Therefore, there is no change in the owner's percentage because of bonus issue. This you
Sir,
can
I thought that was your question.
Sorry?
I thought that was your question. Is the percentage changing? That's why I said no change.
Percentage is not changing. Then okay. Correct? Now you might get this as a true and false question. So, owner's share or shareholders' equity is diluted. That is either increased or decreased after bonus issue. True and false. Is it diluting? Is the shares are increasing? The answer is no. So answer is false. So each and every segment is important. Imagine, no, in this topic we spend nearly about 4 hours. Practical question, if you ask, you will kill it. That nicely I've taught you. But they didn't ask 5 mark practical question. They asked you one theory question, true and false, for 2 marks. Now here, nobody touches and explains this in detail. What will happen? If this comes an exam, if you're not clear, if that vision is not there, if this vision is not there, what will happen? You'll make a wrong attempt, and whatever 4 hours you spend now and at home for revising, everything will go for a waste. So each and every mark is important. Each and every point that we're learning, whether it is theory or practical, everything is important. You never know, sometimes in practical subjects, theory will come to your rescue. In C intermediate, in costing paper, I got 49 marks. C inter costing paper. You'll not believe, theory is what that saved me. Theory is what that saved me. So sometimes in such practical paper like accounting, costing, financial management, where they ask 10 to 20 mark theory, that can be your life savior. Same way, you know that in your accountancy there is 12 marks of true and false, and minimum 4 marks theory direct question minimum. In some attempt they've asked for 4 mark, 8 marks also. So roughly around 16 to 20 mark they ask for theory. That can be an absolute game changer. So every single theory which is there in textbook has to be there properly understood in your mind. You cannot deviate. Effective earning per share, book value and other value per share stands reduced. Now, this you have to understand. Please give 100% focus. Online people, all set?
Yes, sir.
FFL Limited, listed. Or if you understand what is listed, the shares are listed on the stock exchange. Why am I giving example of FFL here? This is calculation. Yeah, KL Limited. Anyways, so let's suppose Akhil is one of my shareholder. Akhil, AKIL. Okay. 100 shares he has purchased of my company at 10 rupees. He's given me 1000 rupees only. But he knew deep in heart, Pratik sir is Khiladi. He will nicely run this academy. And likewise, the market value of the share today is, look at this burger, 10 rupee invested. And today, per share value is earned as 1010 rupees. So what is this total value of the shares now? 100 into 1010 rupees, how much? 1 lakh 1000 rupees. So this is his investment value. Am I right? This is investment, and the investment is grown up to this value, 1 lakh 1000 rupees. So what is his profit? 1 lakh rupees profit he made on my shares. Now what happens is that Pratik sir is having a big heart. The company is doing excellent profits. So company wanted to reward the shareholder. Akhil is feeling what? Sir is not doing any exciting thing for shareholder. What nonsense fellow is. So in order to satisfy, I'm telling Akhil, 100 share bonus. Enjoy. So now I'm going to give him 100 bonus shares. What is the investment value? 0. Investment value? 0. 100 multiplied by 0 is 0. Now please tell me, Akhil has originally purchased 100 shares. And now he is purchasing, now he is getting 100 more shares. So what is the total number of shares? 200 number of shares. So please tell me, will the investment value, that is this 1010 is the market value, share price, that is my shares in the Bombay Stock Exchange and the National Stock Exchange is being traded for 1010, which means what? If Akhil wants to sell this share to any of you, you have to pay him how much? 1010. Now please tell me, after bonus issue, is this price in the market going to be the same, or will it reduce, or will it increase? Ma'am is telling same. Okay. Same. Online people, is it going to be same or increase? Market price of the share. Think and say. If you say 1010, it'll become how much? 2 lakh 2,000. Does this even make any sense? I gave you extra 100 share. Already Akhil was in profit of 1 lakh rupees. Upon giving 100 share, will his profit increase again by 1 lakh? How is it possible? He got it for 0 rupees. Will it become 1 lakh? No. So always your price, market price of the share will dip down. So 1 lakh, 1,000 divided by 200. So total value of the share divided by, sorry, not 200, it will be divided by 2. How much? 505. In other words, what is his investment now? 1 lakh 1,000 is the total value divided by 200. How much? 505. Please check. What is present value of Akhil? When I'm issuing the bonus share, what is his present investment value? 1 lakh 1,000. Same investment value it will be there, no? When I issue the bonus share. The moment I issue the bonus share, will his investment become double? No. When 100 share was with him, still his investment value on that day was 1 lakh 1,000. And the very same day, if I give him 100 more share, still his investment value is same 1 lakh 1,000. But quantity doubled. So what is the investment value per share? It became 505. So what is the investment value on the date of issue of bonus share? Same 1 lakh 1,000 only. Then you might ask a question, sir, then how is Akhil benefiting here? If you're giving free of share cost, he should benefit. No. Yes, Akhil will be benefited. But when? Once the bonus shares are given to him, from here, if the market price further rises, then Akhil will benefit. Because here, 100 shares into 505 is how much? 50,000, 50,500. 50,500. 100 into 505. 50,500. What is his total investment? 1 lakh 1,000. This is his investment value. Now let's suppose his 505 worth of share becomes now 3,005 rupees, or let's say 2,505 rupees. So 100 into 2,005 rupees. So what is the profit per share is getting? Sorry, 2,505. Let's do it. Let's do 2,505. That is after bonus issue. Akhil waited for 1 year. My share price from 505, it skyrocketed to 2,505 after bonus issue. So what is the profit Akhil is making here? 2,000 rupees per share. 2,000 rupees per share. Here also is making 2,000 rupees per share. In other words, you can take this way also. Sir, I am not assuming 505 here. 100 into 505 for 1 share plus 505 for the remaining 100 share, because this amount totally I invested for 100 shares. So total investment is how much? 1 lakh 1,000 for first 100 shares which Akhil purchased. The Akhil got 100 shares at 0 cost. Correct? Now, for the first 100 share, Akhil, how much he paid from his pocket? Let's assume that this 1,001 rupees he paid from his pocket. Let's assume. And he has now sold it for 2,505. So what is the profit? 1,005 minus 2,505. How much is the difference? 1,495 is the profit on the first 100 share. Sir, he invested 1,010 rupees. Correct? No? How much did he invest? 1,010 rupees. So now 2,505 is the total sale value. He's selling it for 2,505. How much did he invest? 1,110 rupees. So what is the profit he's getting per share on the first 100 shares? 1,495. But the second 100 shares, what he's selling at 2,505 and his cost is 0. So what is the profit? Full 2,505 is his profit. So when is he making this profit? After the bonus issue. So extra 2,000 rupees profit is making for 100 share, and this 100 share is obtained free of cost. So when the bonus is issued, on that day the market price will be divided. The total investment value divided by total number of shares, including bonus shares. So the market value will drop. So when will the shareholder benefit? From that day, if the share price increases, then the new number of shares what he's got, no, that if he sells, so whatever rupee increases, every single rupee increases profit for him, no, because he got it zero cost. 505 means what, guys? 505 is the average cost for 200 shares, but original cost is how much? 1010 rupees. Now, for example, let's suppose you scored in accounts paper 100. Let's suppose you scored in the law paper 90. If I do average, what is average marks? 100 plus 90 by 2. So it is 95%. So we say on an average, we got 95%. Does it mean that you got in both the papers 95? So same way when I'm saying 505 is the average price for 200 shares. But does it mean that 505 was the price for both the shares? No. Sir, 1010 rupees was the price for first 100 share. And for the second 100 share, it was 0. So 1010 rupees plus 0 divided by 2. How much? 505. Same thing, no? 100 plus 90 by 2 is how much? 95. So what is 95? Sir, average mark. So what is this 505? Average. So whenever bonus shares is issued, your market price of the share will fall down. Book value of the share will fall down. This is what they're trying to prove the point here. So here, effective earning per share, book value, other value per share will stand reduced. Market price gets adjusted on the issue of bonus shares. Any problem? Market takes the action usually as a favorable act. Why? Because when a company is giving bonus, which means you're getting something free of cost, and the other company is not doing any bonus, no benefit is coming. So which company will be preferred by the shareholder? So shareholder will prefer that company where it's getting any extra bonus. So market will have favorable inclination towards my shares. Any difficulty in understanding this point? Are you able to get that visualization? Finally, the accumulated profits gets reduced because bonus issue is capitalization of profit. So profit is transferred from reserve account to capital account. So ultimately your accumulated profit, that is GR account, and the P&L balance or surplus will get reduced. Does it make sense or not, online people? Hello? Tell me.
Yes, sir.
Yes, sir.
Sir.
Final
Yes,
theory
sir.
point. Companies issue bonus share. Why? This is not there in a textbook, but I had a curiosity. Why? What is the benefit of bonus issue? Who's benefiting? Company or shareholder or both? So I made my own analysis and giving you the detail. The first reason why the bonus shares are issued to the shareholders is to attract more retail investor. Who is retail investor? When a share is listed on the stock exchange, and from the stock exchange, when general public buy and sell the shares, we people are called as retail investors. So when a company is constantly giving bonus shares, then the shareholders are getting attracted to such companies. So this is a strategy for the company or by the company to attract more and more shareholders. Now the question should arise in your mind. So what is the advantage of attracting the shareholders to my company? Because the capital, whenever I did the initial IPO, that time itself I got capital. After that, whatever the trading is happening in the stock exchange, what happens in the stock exchange? All of you know. See, I wanted 10 lakh rupees. So I gave 1 lakh shares into 10 rupees. So 10 lakh rupees, the money I got in the IPO. All of you understand what is IPO? I made the initial public offer. I got 10 lakh rupees. Money is in my hand, in the company's bank account. Now the shares are listed in the stock exchange. So in the stock exchange, this 1 lakh shares is purchased by some party, sold by some other party. So what happens? This is the company. This is the stock exchange. And this is the retail investor. So what does the retail investor do? Retail investor, through broking companies such as Zerodha, Grow, IIFL is there, Angel Broking is there. So what we do is, we retail investors, through the broking platform, we buy the shares of this company on the stock exchange. This stock exchange is like a departmental store where all the stocks are listed. How in departmental store all the products are listed, like that all the stocks are listed where? Stock exchange. So stock exchange is like a departmental store. So we cannot go and directly get the stock from the departmental store because we are not authorized. Like we go to Palamudra and get here, no? Like we go to DMart, we go to Reliance store, we can directly go and get as a retail investor. But in the share market, this doesn't allow. You are not authorized to enter the stock exchange. Who is authorized? Brokers are authorized. So through brokers only you have to get the shares. So what happens? retail investor will pay, let's say, 1,000 rupees to the broking company, and this broker will pass on this money to stock exchange, and stock exchange will give this 1,000 rupees to some other retail investor who is a selling party. So this seller will sell the shares to whom? Stock exchange, and stock exchange will hand over that to broker and finally to retail investor. And for that, this fellow has to pay 1,000 rupees to broker. Through stock exchange will go to the seller. So ultimately, the money is flowing between one retail investor to the another retail investor. In this process, anywhere the company is coming into picture. Anywhere the company is coming into picture. Now the question that arises is that when the retail investors are buying the shares of the company, more and more shares of the company, what is the benefit for the company? Here the first point said that to attract more retail investors. Why does the company want to attract more retail investors? What is the company benefiting? Attracting more retail investors means what? We want more people to come and buy and sell the shares of my company. Attracting the retail investors to what? To participate in the stock of my company. Why am I so interested that my stock, I want it to be traded in the stock market? Why? If you can relate to economics, you can relate and tell me an example. Very good. Demand and supply. Sir, in the company, in a stock exchange, in the stock market, if a particular share is more in demand by the shareholders, what will happen? The price of the share will go up. If the price of the share will go up, who is benefited? Existing shareholder is benefited. Promoter is benefited. Because promoter's share is face value 10 rupees. In the share market, it is trading at 2,000 rupees. So 1,990 rupees, it is benefit for him. So now the 2,000 became 3,000 means more benefit for the shareholder. If it becomes 8,000 means more benefit for the shareholders. Let's suppose all of you are shareholders of CA.Prathik Academy. Initial, I was a promoter. Then you came as the initial investor. Then later I listed the shares in the stock exchange. So how will you all be benefited? By two ways. The dividend what I give you, no, that is one benefit. Second, the price at which you got my shares is, let's suppose 100 rupees means in the share market, this will be traded for, let's say 2,000 rupees. So how much profit you're making? 1,900. So these are the two attraction for you guys. One, you're looking for dividend. Second, you're looking for the capital profit. This is called as capital profit. So when more and more people are coming in buying shares of my company, demand is high. When the demand is high for a particular product, the price of the product will go up. Have you heard this scenario of tomato and onion in a particular season? It shoots up to 200 rupees per kg. Tomato, 100, 200 rupees. Whereas in the normal time, it is for 10 rupee per kilo or 20 rupees kilo. It goes up to 100 and 120 or 300 rupees. Why? Because the demand is very high. Nobody is there to supply. So people are willing to pay more money to buy that product. So same way, the company wants to increase the share price of the company, and to increase the share price of the company, one of the strategies to increase the retail participation, which means what? We want more and more of our shares to be bought and sold in the stock exchange. So if that volume of shares are bought and sold very frequently in high volume, the price of the shares goes up. So who will benefit? The promoters, and the existing shareholder will benefit. So if I give bonus to the existing shareholder, is it not beneficial to the existing shareholders? The answer is 100% yes. So who is first getting benefited out of bonus issue? The existing shareholder is getting the first benefit of the bonus issue. Online people, is it making sense? Tell me.
Yes, sir.
Yes, sir.
Yes, sir.
To attract more retail investors to participate in the stock, as bonus issue results into lowering of the price per share post issue. Now, one more point here is what? Initial my share was 1,010 rupees. The moment I issued the bonus share, I divided by 2 because I issued bonus in the ratio 1:1. So divide by 2. So how much is the price per share now? 505. So now initially what happened? My share was trading for 1,000 rupees. People were hesitant. Who will buy for 1,000 rupees? Are you very expensive share? Now the moment the bonus is issued, the market price of the shares is reduced to 505 rupees. Now people will feel 500 rupees now we can buy. Compared to 1,505, the share which I was getting for 100 rupees, sorry, 1,000 rupees, now I'm getting it for 500 rupees. So people will be more attracted to buy the shares of the company. If the more and more shares of the company is purchased, the value from this 5,500 will again increase up to 2,000. So two advantages to the bonus shareholder. One, the price is getting reduced, and because of that, more people are buying the shares of the company. Clear this point? Second, it reflects the financial soundness of the company. It reflects the financial soundness of the company. Means what? A company who's not paying bonus, how will you look at C fellow? Not even giving bonus. On the other hand, Kalpreet Shekhar is giving bonus. Free of cost, you're getting extra shares. So if I'm giving you extra shares, means how much money I should have in my company? How much money should be there in reserve? How does reserve get created? Out of profit of the business. How does the profit of the business comes? When my sales is high, when my service income is high, when my expenditure is less, which means that I'm doing good business, no? Income is high, expense is less, profit is high, and that profit I'm giving to you in form of bonus shares. So that shows that how strong my company is. So it reflects the financial soundness of this. Soundness means what? Soundness means what? High soundness means high efficiency in the company, better the company is. Low soundness means okay companies. So soundness means what? The financial strength of the company. Third, one more benefit for the company now. Bonus issue, what is the benefit? In the CRR and the SPR, the money cannot be used for expansion of the business. So let's suppose I want to open one more branch in Chennai and Hyderabad and Bangalore. So I need to buy either land or I need to get the premises on rental basis. For that, I need to pay huge advance, 10-15 lakh rupees. Monthly rental, interior I have to do, I have to get furniture, AC, projector, all that. 30 lakh rupees investment in per branch. Now I have reserve SPR, CR is also there. But can I use it? Because SPR and CRR is restricted for specific purpose by Companies Act. So money is there, but I cannot use it. I'm compelled by law not to use that money. So now I'm thinking how to use that money. So strategy, issue bonus share, where the restricted reserve are converted to capital. Now once the money comes into capital account, I can use it for the expansion purpose. So therefore, the restricted reserve such as SPR can be utilized for the expansion purpose. Correct? No? Next advantage again for the company. Preserve the liquid resource like cash, which otherwise would have been distributed as dividend. Means what? In reserve, if there is 10 lakh rupees, means what? The entire 10 lakh rupees you have to give to the shareholders. Even if you don't distribute as dividend now, when the company is being wound up, you have to repay the money back to whom? Shareholders. So company is thinking, I should not pay this money to shareholder. I'll give them dividend. I'm not telling that I'll not give dividend. I'll give dividend, limited dividend. 10 lakh means out of that 1 lakh I'll give dividend. 1 lakh approved in general meeting. That is AGM. 1 lakh disbursed also. Remaining 9 lakh, I'm not distributing. But somewhere I know deep in heart that if I do not distribute this 9 lakh rupees now, in future, if I'm not utilizing this money, I will have to distribute to the shareholders. So what are they doing? They're trying to issue bonus share, and this is converted into your capital. And you don't have to pay the money to the shareholders. So it is converted. Once it is converted to capital, when will you pay? Only at the time of winding up. Otherwise, if the profit is there, you might have the pressure from the shareholders that why are you not distributing as dividend? So this could be one of the reasons why people or the company prefer to issue bonus share, so that the profits is converted to capital and they don't have to pay that in form of dividend to shareholders. And that money they can happily enjoy it and use it for the company. Now, this is the few probable reasons why the companies prefer going for issue of bonus shares. Any problem with this? Online people, any problem with this?
No, sir.
No, sir.
So what is the meaning of bonus shares? It's been given here. How the reserves has to be used has been given here. I want all of you to go through each and every single theory and see if you have any other points left out. I have covered, I know. But from your side, I want you to go through all. Did sir teach properly? Not have to check, no? Correct, no? So you have to read all the theory pages and let me know what difficulty you're facing. Section 63, subsection 1 says what? Subsection 2 says what? Subsection 3 says what? Para 39(1) of table F is nothing but case 3. We discussed case 3, no? This is as a result of para 39 of table F. Para 39, 1 of table F. So whatever point I said, that there is a process of converting your partly paid into fully paid out of reserves, and that for that purpose you're supposed to use only free reserves and not the other reserves. All that has been mentioned here. All that has been mentioned here in complicated language, and I try to give the same thing for you for the simplified language. In the simplified language, I gave it to you. All this I want you to go through. Same journal entries. This is case 1 journal entry. This is case 3 journal entry. Case 3 journal entry. Illustration 1 we did. 2 we completed. 3 also we completed. Now illustration 4, I want you to take it as homework. Illustration 4, same question, but different numbers. You see, authorized capital is given, 15,000 preference share, 150 equity share, issued is given, reserves is given, GR, CRR, SPR, P&L. The question says what? On 1st April, final call 2 rupee was made. The call money was received on 20th April. Thereafter, the company decided to capitalize the reserve by way of bonus, 1 share for every 4 shares held, 1:4. Same question like previous one. Show necessary journal entries and prepare the extract of balance sheet. Same thing. So first you'll make the due entry. The second entry, money is received. So partly paid is converted to fully paid. Case 2. Then what happened? You're passing the bonus ka 2 entry. And then what happens? Extract of balance sheet. Extract of balance sheet. So earlier, what is the authorized equity shares? Only 150. But after bonus issue, the authorized is increased to 168. So this is same point. Numbers only different. Feeling is the same. So can you take this as homework? Online people, any problem in this?
No, sir.
No, sir.
Next concept is rights issue, which I'll be discussing in the next class. So rights issue, we'll keep it pending. We're not done. I'll still take 5-6 minutes. Then if you come down, summary. Behind every chapter, there's a summary. And the beauty of the summary is what, normally summary means what? Whatever we have discussed in the full chapter, summary of that is this. But the beauty here, summary means what, that will be there. Apart from the new points they'll add also and give you. So what do we think? Summary means whatever we studied, same thing only, Who will go to summary? Like that you will think. But in summary, there'll be new points from where the true and false will be asked upon. So every chapter or unit book bag summary has to be in your fingertips. If you don't believe me, you can go through these points and see there are certain points which is not even there in the real chapter. That is the chapter what we studied. Effectively, I'm talking about these points. This point, this point, this point. It is not there. But it is given in the summary. So please go through the summary. Though I've put it in the PDF, but I wanted to go through from your end as well. Multiple choice question, you will do it. Now you might feel that, sir, we don't have MCQ in the format. Why do we do it? This MCQ can be converted to true and false and being asked. So you never know. Sometimes surprisingly in MCQ, they'll put a new concept, which is nowhere there in the chapter. So what will you do? So MCQ, pakka, you have to study all the MCQ without leaving any one point. Theoretical question, 100%. This might get converted to your 4-mark question in the exam. Now, sometimes we have also seen a question where from this topic, they'll ask you a 4-mark question. It is nowhere mentioned here. So somewhere in between it is coming. So which means in between theory also should be there in your mind, especially the citing questions, the difference between questions, all this high probability of being asked, and they have asked also. Then comes practical question. Practical question 1, you can take it as homework. Very simple question. 4,500 equity share of 100 each, 450. So can I say this is case 1? Fully paid up shares. Security premium collected in cash. CRR, GR, PR, P&L, credit balance. The company decided to issue equity shares. Company decided to issue 2 equity shareholders bonus share at the rate of 1 share for every 3 share. So ratios 1:3. The company decided there should be minimum reduction in free reserve, obviously, because we want to first empty the CRR. So can I take this as homework? Now imagine this was not CR and DR. So what does DR balance means? Debit balance means it is a loss.
Loss.
So had they given DR here, can I use the 65,000 for the purpose of bonus issue? The answer is absolutely no. In exam, sometime what happens? No, they'll give you same ditto question. The moment you see the ditto question, you'll be extremely happy. Oh my God, this is the same question we did 10 times. But what this fellow would have done? No, instead of CR, they would have made DR. Now you know that 10 times you practiced this question. Same question came. Name also same. Starting also 4,500, 450, 40. Everything is same ditto. From CR, they have changed it to DR. Let's suppose. Can you use that for the general journal entry? The answer is no. This you will ignore. Are you able to follow? So this is only going to confuse you. You have to be very careful, guys. Each and every line item, each and every single letter and word you have to go through. This is practical question number 2. Same as we did now. The case 2, the big question, where they give the authorized number of shares, called up and paid up capital, reserves and surplus is given. What does the question says? Sir, the final call 2 rupees was pending. That day called up and the entire money was received in April. Bonus has been given 2 shares for every 5 shares held. 2:5 is the ratio. Pass the entry. So can I say same illustration 3? Correct, no? Should I do this question? Like, sir, question, practical question 2 also, homework. 3, same question, no change. 3 also, homework. So till 3, your target is to complete the homework. It doesn't stop here. It doesn't stop here. Wait. 4th onwards is a rights issue. Now, I'll be sending this scanner to all of you. There's one scanner that has been prepared and given to all of you. This scanner, basically. So what is this scanner? So this is a PDF where I'm doing. This is a PDF where all the ICAI questions, that is illustrations, book bag, exercise, practical question is covered. Not only that, 2018 onwards, all the MTP questions, RTP questions, past examination questions, everything is covered here. So this topic was earlier there in the CA intermediate level. So in intermediate, wherever this question was being asked, everything is captured as one single document. So this hard copy you will get it. But since we prepared this document for the very first time, there could be chances of any alignment error in this soft copy. So initially we'll give the soft copy, using which you have to complete all the homework questions. And then you tell me if there is any corrections to be done. If there is no correction, we'll take the printout of this and give it to you as a hard copy. Am I clear with this point? Point number 1. Now here in the bonus share, once you get this, you will get in the encrypted format. You will not get in the normal PDF. In the Rio Play software, you have to open and see. In that, all the questions except right issue questions is homework. So please note down which all questions you should not do. Rest all you are supposed to do. Totally 30 questions are there. Mostly all are similar. 18 question, 29 question, don't do it. I will do it. 18th and 29th, I'll do it. 24, 30, you don't do it. This we have to do after the next topic. So I'm just writing on the screen. 18th question, 19th question. SPJ will do it. Who is SPJ? '24 and 30th question we'll do after the next chapter. So you're not supposed to do 18th question. You can do 18th question, 19th question. You do it. No problem. You'll be able to manage. But I will also do it in the class. 24, 30, don't do it. And don't do rights issue question. So whenever you read a question, rights issue will come. Ignore that question. That apart, I think there are nearly about 14 questions, 10 to 14 questions pertaining to bonus issue, which you have to complete by Sunday. So today is what, Friday? Saturday, Sunday, 2 days. And your job is not only that, other subjects also you have to study. Accounts class also you have to watch, old ones. So, if you're planning to go out anywhere on Sunday, cancel all the plan. Anna? Any problem? 18th and 19th question, I would want you to try. It's a slightly different question. It's not 100% different question. The language is slightly different. Do it as homework. If you're not able to do it, you have doubt, I'll do it in the class. But rest all the questions. Apart from these 3 segments, all the other questions, Same ditto, whatever we did, no? Relation 1, 2, 3, same lines. Only number and name is different. Rest all it is the same. Online people, am I clear with what I'm trying to say?
Yes, sir.
Yes, sir.
Everybody, please respond.
Yes, sir.
Fantastic. Now, my humble request, every time I tell, the revision technique that has been given to you, please follow. It is that which is going to help you. Otherwise, nothing will stay down here. It's my humble request. Please do not miss out on the revision technique. It is very crucial if you want to pass. So one thing, make it very clear. Revision technique, if you follow, you will pass. If you don't follow, you will not pass. Put that in your mind. I'm telling you very clearly. How many of you followed the revision technique in the last class? Right, Akhil? Boys? Followed. Gokul didn't follow. Right? Again, you're being very... I'm telling you, don't rely on your brain. I don't rely on my brain itself. Please don't make that mistake, Gokul. Already we have seen one disappointed face. Let's not do it. Akhil, for you also. No. I'm telling last class onwards, I told you to follow properly. Online people, did you follow the revision techniques what I told you?
Yes, sir.
So today, whatever you studied, either tonight or tomorrow morning you'll revise, and Sunday you'll do the revision of the entire chapter. And then next Sunday, leave it. Third Sunday, you're supposed to again do the revision of bonus. Is the deal okay?
Yes, sir.
Chalo people, with this we come to end of this concept of bonus share in the particular unit. I'll see you all in the next class, which is on Monday. Timing will be updated. Until then, bye-bye. See you. Take care.
Thank you, sir.
Thank you, sir.
Thank you, sir.
Thank you, sir.